please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, lots of action over the next 30 minutes, but first let's talk about the macro picture now. Amidst rising fuel prices and a depreciating rupee, the Prime Minister is likely to hold a crucial meeting this weekend to take stock of the economy. So a top government official has told CNBC-TV18 on what we can expect, and I quote now, "We have to hold our nerves." According to our sources, the government is of the view that it can't take panic steps on both rupee as well as fuel. So the big question is, will the Prime Minister announce any measures in this weekend meeting? Shireen Bhan joins in now with a check on the key issues. Shireen, what can we expect, and rather what is likely going to be discussed tomorrow?
There is a crucial meeting that the Prime Minister is holding on Saturday with top government ministers and officials to review the economy. The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate. So the message is that they may hold fire for now. The sense is that there is no need for a knee-jerk reaction on the rupee because the economic fundamentals continue to remain strong, and also very mindful, especially within the finance ministry, that fiscal prudence is crucial to ensure that bond yields don't spike further and that the rupee stabilizes. In fact, the finance ministry is clear that it wants to stick to the fiscal deficit target. But remember, it is an election year, so eventually this will require political support and a political call. Specifically on the issue of oil, political demand in the first quarter was to lower fuel prices by almost 5 rupees a litre. Now, the demand was that the centre cut excise by 2 rupees, the state reduce VAT by 2 rupees, and OMCs absorb a 1 rupee hit. But that demand was turned down. The finance ministry clearly believes that it is not advisable to go back to either a subsidy sharing mechanism or act on cutting excise just yet, because that will have a multiplier impact, because the signal it will send out will have an impact on bond yields and then consequently on interest rates, making things even worse for the government. So the path that they would like to take for now is to wait it out to see how the Iran sanctions impact the oil markets, and maybe, if need be, act closer to November post the Iran sanctions coming in. Remember, the government is weighing its options on oil payment for Iranian crude, also hopeful that the dialogue with the US on importing Iranian crude will be fruitful. The message that the political class, especially within the BJP, is going to be sent out is that an excise cut at this point in time will restrict the government's ability to spend on things like Ayushman Bharat, which is the Prime Minister's health insurance program, and other development schemes. So that's going to be the sales pitch to the leaders within the BJP. Separately, there is concern on GST collections, on GST revenue. But North Bloc hopes that the direct tax mop-up will offset the shortfall on the GST front. So at this point in time, extreme caution on announcing any other kind of cut when it comes to the GST, and hopeful that things will pick up there. So net-net, the view is that Wednesday's fall and the dramatic recovery in the rupee suggests and indicates that there was overshooting, and that India is in a much better position among the emerging markets because growth is strong and our fundamentals are good, and hence the government believes that the currency should stabilize.
Okay, Shireen, we'll know tomorrow then. Thanks for joining in with that. But we also spoke to a whole host of former policymakers and experts on what they expected from the meeting. Let's hear out.
There is no reason to panic, but the fact is that media has created panic. The fact is that the political system is making a massive issue out of it. So the government has to be seen to be doing something. And I think what the DEA secretary was doing was essentially what the Governor Reserve Bank should have been doing, which is talking the market up. The government has been very measured in the response, and I think they should continue to be so. If at any point the government is seen to be panicking, that would send just the wrong message at the wrong time.
They are sending the message that they believe that the fundamentals of the economy are really sound. They believe that the rupee level is not warranted, the current rupee level that we are seeing. And let's just look at the previous, and they have talked about or hinted that the FCNR, the foreign currency non-resident deposit bonds, are under consideration. Whether they are or not is not really or at issue over here. They are trying to communicate to the market that, listen, we are aware of what's going on, and very emphatically telling the market that this level of the rupee is not warranted by the Indian fundamentals.
Okay, regardless, the markets will be watching that very closely. But for the day, strong global cues and an appreciating rupee saw bulls make handsome gains on the last day of the trading week. So Nifty gained about 11,500, gaining more than 1% by the end of the day. So it was green across your screens. As you can see, Sensex managed to keep its head above the 38,000 mark. Broader markets are performing, with Bank Nifty and mid-caps rallying almost 350 points. Surbhi Upadhyay is joining in now for a detailed check of the day's trade. Surbhi, we could have belonged to the bears, yes, but the bulls seem to have made the final expression. Was it, thank God it's Friday for the bulls?
I think that's how it's playing out, because what we've seen over the last 2 weeks is the first half belongs to the bears and the second half ends up belonging to the bulls, and that's exactly what we got this Friday as well. So the cues, of course, have been quite supportive. International crude oil prices also slightly stabilizing, and the rupee recovering. The entire focus of the street obviously is on this weekend meeting and what could come out of it, and that pretty much kept the excitement on track today. So I'll quickly run through the stock list and what was gaining. On the Nifty, actually, I mean, most stocks, you hardly had 3 or 4 negative movers. The entire index was about up and about otherwise. BPCL, Vedanta, HPCL, some of these commodity plays had a good session today. Financials were very strong, both on the NBFC side and on the bank side. Take a look at the kind of pullback you've seen on stocks like Indiabulls Housing Finance, 6%, 7% up on that one. Bajaj Finserv, Bajaj Finance, all of these stocks were up and about. On the banking names, SBI, ICICI Bank, these were some of the other names. Again, on the NBFC side, HDFC for that matter. So a lot of strength coming in different pockets of the financial universe. The one interesting mover in the afternoon was Bharti Airtel. Big move on that stock in anticipation of the IPO of the Africa business. That became the buzzword towards the end of trade. And we had some positive moves on Bharti. What didn't quite work out today, some of the tech names that were choosing to kind of sort of take it a little easy, some profit booking on Infosys, on HCL Tech, and even something like Coal India. Mid-caps was where the party really was being felt today, and lots of big stocks are flying around. So whether it was Ashok Leyland, they've got a new order for buses from Bangladesh, or something like an EIL, Voltas, which is going to be setting up a new joint venture for appliances. Spark, good news coming in for Sun Pharma Advanced Research. They've got a product approval from Halol, so that stock was up and about. In fact, even other pharma names like Granules, etc., Divi's Laboratories, were very, very active stocks. But I'd have to say the sector of this week and today really has been sugar. Don't remember the last time we had such dramatic moves on sugar stocks ever since the ethanol price hike was announced. Even today, 20%, 18% on many of these names like Dhampur, Bajaj Hindustan, and Balrampur Chini.
Okay, Surbhi, thanks for that. We'll, of course, be addressing some of those stock-specific news stories a little later in the show. But for now, it's been all about the rupee this week. So let's talk about the currency market. The rupee has erased early gains and is at the moment trading near the 72 level, 71.89 at that. Earlier in the day, the currency rose more than 60 paise, boosted by a lower wholesale inflation number. Reports that the Prime Minister will hold an economic review to take stock of the rupee fall and rising fuel prices has also helped sentiment. So we've been getting a host of comments around the rupee. Let's hear out some critical analyst views.
The government, as you know, and you've been discussing, came out to say that it would potentially take measures to try to strengthen the currency, or at least control the currency. And of course, there's this meeting this weekend. The RBI had been intervening before that, and it made clear that the government had requested that the RBI intervene more aggressively. So that in and of itself sort of put a cap on. The ECB delivered on expectations for an end to a QE program and some degree of signaling that it would increase interest rates in 2019, even if it is in the second half.
I would attribute the majority of that to the global cues because it's not just a question of the rupee. Generally speaking, the dollar has weakened all over the world in the last 48 hours or so. I don't think there is that creative panic or urgency to warrant inter or meeting measure. We have seen episodes like that in the past. We're not in an episode like that right now. As far as the RBI is concerned, yes, they'll hike next month. They'll hike in December.
The government should not panic. There has been a fundamental-based adjustment of the currency in the last few months. All that is required at this point is a signal from policymakers that if the rupee does overshoot, they stand ready to take whatever actions are necessary. And I think sometimes it's just these signals that are required to change market behavior. What we've seen in the last couple of weeks is, a self-fulfilling prophecy. Exporters have stood out, importers have front-loaded. You can change all of that if you signal that beyond the point the government stands ready. So I won't be surprised if nothing is done this weekend. I think that may well be the appropriate strategy.
Our own fundamentals, whether on inflation, current account as well, the growth outlook is significantly better today. Second, I think the monetary policy regime, having embarked on a flexible inflation targeting regime, to suddenly change tack, sort of do an intermeeting hike to try to defend the currency sends extremely confusing signals when clearly the inflation and even the core inflation momentum appears to be quite stable. So there is absolutely no need to panic at this stage.
Okay, so the view across the board is that there is no need to panic at this stage at least. Let's talk about fuel prices. They continue to climb across the country. So today, oil marketing companies have hiked the prices of petrol by about 28 paise, taking the price to 81.28 rupees per litre in Delhi and 88.67 rupees in Mumbai. Diesel prices are also at fresh highs, with the fuel retailing at 73.30 rupees in Delhi and about 77.82 rupees in Mumbai. Barring September 5th and 12th, where OMCs maintain status quo, fuel prices have been hiked every day for the past few weeks. In the commodity market, crude prices have regained some lost ground. The Brent crude is now trading comfortably above the $78 a barrel mark at 78.31, and NYMEX is inching towards 69 at 68.83. In the previous sessions, prices had fallen on a one-month low to worries that a slowdown in emerging markets and trade disputes, especially between US and Canada, would possibly dent the demand for oil. Now, CNBC-TV18 spoke to market participants, including top foreign and domestic brokerages and fund houses, on their expectations from the Prime Minister's review meeting on recent macro developments like the rupee slide, rising oil prices and widening current account deficit. Anisha Jain now joins it with the findings. Anisha, what is the market expecting then?
Oh, well, yes, all eyes are on the economic review that is scheduled this Saturday, wherein the Prime Minister will take stock of the economy. As you mentioned, the sliding rupee as well as the move in crude has actually caused a bit of concern for the market participants, and they are looking forward to what comes out of this meeting. As you pointed out, we talked to a whole host of experts as well as the foreign and domestic brokerage houses and market participants to see what are they expecting from the meeting that is expected to be scheduled this Saturday. Now, first up, we asked them, is there any immediate action that is required to stem the rupee slide as well as manage the fuel prices? Now, 80% of the participants believe that there is no need for the government to take any action, that there is no need for the government to take any panic reaction to such move, and the rupee as well as the fuel should be allowed to move as per the market dynamics. Secondly, we asked them if they are expecting any specific steps to be announced after the meeting tomorrow. Well, again, 80% of the participants believe that we might see some generic statements coming in through, but no specific steps might be announced. So then what are they expecting in terms of statements? Well, majority of them believe that they will talk about adhering to the fiscal policy. You mentioned how it is being a bit of concern. They are expecting that they will talk about maintaining the 3% mark that the street is expecting. Other than that, it is expected that they will reaffirm the fuel pricing policy and may not talk about any subsidies or any cuts that we were expecting in terms of the rates as well. But this is what the majority is expecting. There are some whispers and some portion of the market that is expecting some specific steps as well. And they expect that they might open some special RBI window to manage the needs of the oil importing companies. Because do remember, a lot of the rupee slide has actually been put onto these oil marketing companies. So they are expecting a special window might be opened up. Other than that, they are talking about some FCNR type issue to tap the NRI funds. They're talking about some other export incentives and some restrictions that could curb the imports as well. So that is what some of the market participants are expecting as well. Other than that, if you talk about what regulatory action is expected, well, they believe in fact, this is unanimous, that they say that the interest rate hike is possible in the next credit policy, but maybe no inter-policy rate move is what we will see. So most of them believe that in the next credit policy, we might see a rate hike, but nothing that will come out tomorrow.
Okay, Anisha, thanks for that. Time for a very short break then. Up next, fresh twist in the Malia controversy. Senior Supreme Court lawyer Dushyant Dave claims that SBI's delayed action helped Malia escape the country. Welcome back. You're still with After the Bell on CNBC-TV18. Now, as petrol and diesel prices jump to lifetime highs, logistics and transport major Gati feels that it is time to adopt the electric vehicles for cargoes as well. Sources tell CNBC-TV18 that the company is in talks with auto manufacturers to develop EVs for the logistics industry. Nitya Palakrishnan is here with more details. Nitya, GUTI is clearly betting big on the electric mobility space. Who are they talking to actually look at launching something?
Given the government's push towards e-mobility, implementation of GST and, of course, like you mentioned, rising fuel prices, no surprise that logistics player GUTI is looking at betting big for electric vehicles for delivery of cargo in the future. We're given to understand from sources is that GUTI is in talks with OEMs and players like Ashok Leyland, Tata Motors and M&M, all of which have a significant presence in the EV story, and they are looking to collaborate with these players for the same. Now, we did speak to GUTI, and officially they did not want to comment on specific talks, but they have indicated that they are looking to participate significantly in the electric vehicle story. They are looking at e-cargo vehicles in their fleet in the next couple of years and significantly adopting EV into their fleet as well. And they will be participating in the ecosystem for electric vehicles across the country. One more thing that they've indicated is that government support, both central and state, will be mandatory in establishing any kind of an electric vehicle footprint here in India.
Oh, absolutely. Thanks, Nitya, for joining in with that. But on the occasion of Ganesh Chaturthi, India's largest air conditioning company, Voltas, has launched a new range of appliances. Priya Sheth has exact details. Priya, tell us about these new products. What does it mean for the company in terms of expansion, in terms of adding value-added products to the portfolio?
Well, close to 2 decades after exiting the large-scale consumer appliances space, Tata Group firm Voltas has now seems to be gearing up to take on Korean giants in the consumer durable space. In fact, the company has teamed up with a Turkish firm, Arçelik, and the products will be co-branded as Voltas Beko products. Now, remember that the company will be launching the whole range of appliances, including refrigerators, washing machines, microwave ovens, as well as dishwashers, and they plan to launch about 100 SKUs over the next 3 months. Now, initially, to begin with, the company will be importing products across categories, and they will be starting manufacturing in Ahmedabad once the plant is ready, and that's expected by FY20. Now, the management has also been reported saying that they may be looking at about 10,000 crore rupees of revenues by 2025, and the key differentiator of the products will be the quality as well as pricing, so which means that they are looking at value for money as well as affordable products making their way into the market, and it's a space that we will continue to track going forward.
Okay, Priya, thanks for putting that into perspective. But with that, we're completely out of time on this edition of After the Bell. Thanks for watching. Stay tuned to CNBC-TV18, Taking Stock. We'll take all the action forward on the other side of this very short break. Don't go anywhere.